All right, what's going on, Blockcircle team? I hope everyone has had a great start to their February. We got Valentine's Day coming up tomorrow. Hope all you guys got some plans for that. But anyways, I appreciate you guys understanding the last week and my having to take a short leave for my grandmother's funeral, and it was, wonderful and all that. A lot of family was there, and it was very beautiful. Clearly for us and not her. So that was awesome. I appreciate you guys understanding that. But anyways, let's talk crypto because we got a lot going on and I got a lot to say. So I'll try to keep this under 30, 40 minutes, but you're going to want to grab some popcorn and lock in. So let's take a look at the monthly. Last month we had this really nice setup, this close above the monthly 8. Monthly cycle came up and we had an uptick in monthly momentum for the first time since really the top. So this is a really great sign, but on lower time frames, we still got some work to do, which we can see visually on the monthly with all these EMAs still being above current price versus, the majority of Bitcoin's life, it trended above all the EMAs, and the only trend we were really worried about was the 8 EMA, but now we've got other EMAs that we got to worry about as well. And we'll see that more clearly on the weekly with the bands and the daily with pi, where we stop perfectly at pi. But anyways, on the monthly, key levels to be looking at right now are pretty much right where we're sitting is the first key level, which was the big high from November before the FTX drama. And we'll look at these levels a little closer when we zoom in. And then there's a big gap down to 18.4 and just this monthly region in general down here. So I pretty much have the mind that either we hold around like 20K or we're going to get a really sharp drop, potentially down all the way towards 16. And then, of course, we'll outline the all-time high or previous all-time high. Okay, so those are our big levels in the monthly. And then on the flip side, right, the top close of this region, definitely seen as resistance. And then this kind of candle low here and this candle high here, we'll outline that around 25.5. Okay, so those are our big levels of interest right now. We're kind of just chopping around, right? We've got this monthly reversion that we're trying to play, but now we're back below the monthly 8 EMA, which is sitting right around 22.5 to 23K. So current bull thesis, guys, this is the big thing for this video. Unless we reclaim around 23K, we are now bearish intermediate term. All right, so let's calm down. I'm not saying, it's bear market for the year, but that's just the facts, right? It's bearish intermediate term until we reclaim that 8 EMA. So I will say, though, the second reclaim of this 8 EMA is likely to be very good. When you have an EMA that does something like this, or you have a big trend, let me see if I can just draw it here. You have this big trend, you're riding the 8, and then you crack below it, it starts to come down. Well, the process of it coming back up, very often, price will do, to come up and test it, and then get above it, back below it for the higher low, and the second time it gets back above it is like go time, right? And you're not always going to get that. Sometimes you'll get above it, and you will not break it. Like if you go look at 2015, 2016 and on, that whole bull run, we did not break it. Sometimes it's going to happen. If it's a giga bull trend, it's going to happen. That's why I think this is always worthy of a buy. The first retest of the 8. Just keep it in mind, it's not always going to be, it's not always going to be successful, as we've seen with us now getting back below the monthly 8. But still very significant. So the next setup where we get above that is absolutely actionable. And definitely would want to be on the long side. But remember, guys, short term is intermediate term bearish. If you're looking for trades, I think shorts are pretty viable. But we'll talk about that more as we zoom in. Nothing really else to go with on the monthly. It's just going to be a kind of a guessing game on which one of these levels get tagged. And today I'm actually going to look at something a little bit new for me and new for all of us possibly, which is VWAPs, volume weighted average price, which is essentially just the average price over a period of time weighted by volume. You ain't got to be rocket science to figure that one out, but I have been learning from a new mentor of sorts about this stuff, and it's actually proving to be extremely valuable. And so these levels seem to have a lot of significance, so I'm going to start using them in my analysis. Now, I've been practicing like trading with it and scalping and stuff, and I'm still not, I think it's very nice. Like those shorts I nailed last week were all thanks to that basically. But I'm not really like willing to go into it super detailed yet. I want to spend some time, make sure I can be profitable over a month, 2 months, stuff like that before I really start to teach you guys what I'm trying to do with it. But for now, we'll just start by looking at those levels too. And what we're going to be focusing on. Sorry, just get some water. What we're going to be focusing on is, like I said, the VWAP, which once again is the average price over a period, weighted by volume and price. And in addition to that, we're going to be looking at the standard deviations away from this, right? A +1 standard deviation and a -1, which we will refer to, and is often referred to as the value area high, VAH. Okay, and then here's the VWAP, my crude writing. And then the value area low. And again, this is the value area in here, right? A standard deviation on either side of the VWAP. And this is the low, and this is the high, right? And the idea is, when you're trending above this VWAP, we should expect expansion to that value area high. And when you're trending below it, we should expect to get pushed down to the value area low. And then when we break outside of it, it's expected that a retest will hold and that we will expand much higher and the trend will continue, and vice versa for breaking the value area low. Likewise, you break it and you get back in it, we should expect at least a move to the VWAP and possibly even a full move up to the value area high. Okay, so that's the idea behind that. I'm going to start looking at that and referencing this a lot. So I'm also in the process of redoing the whole Blockcircle trading course, so I will address this in that course for those of you, and I think that'll be available for everyone. But anyways, let's go ahead and get into the weekly. I'm going to do the full Blockcircle top down, and then we'll start looking at some of those VWAP levels afterwards. All right. So, going into the weekly, we could see why this whole "we're not out of the woods yet" scenario is playing out. Because yeah, we closed above the monthly 8, the monthly cycle is coming up, the monthly momentum is starting to come up. But inside of that, again, this is multiple time frame analysis. We have a weekly cycle that is testing the bearish bands and failing. We have our current trend on the weekly, higher lows with each weekly candle is now broken. Intermediate term downtrend has begun. The weekly cycle's up, but starting to come down at the peak, and momentum is starting to reverse. So we have potentially a higher time frame reversion, and then right below that, we have a reversion in the opposite direction, taking us down. So you just have to keep in mind, we have multiple trends going on here, and it's okay to be positioned for all of them. Like all these little altcoin bags I have lately, these are all bets on the longer trend, right? This is not something that we want to puke if we come back down here. This is something we want to hold for the greater thesis, right? Or at least that's my plan. And then perpetual swap plays, leverage trades, that is stuff I'm holding for the short term, right? Had some shorts up here, cut those. Any longs we take in here, you might have to cut on a quick bounce, right? Because we don't know if that'll become resistance again up near 23K. All right, so those are the short-term trades versus our long-term investments, if you will, right? And these shitcoins for me are long-term investments, right? Now, I'm not married to them or anything. I'm willing to cut them if I'm not liking what it's looking, but for now, those are trying to be things I'm holding for a while. Thus that, if crypto rips overnight, I have exposure to crypto in many different ways. At least one of these is probably going to continue going up if Bitcoin just rips out of nowhere. At least that's likely. But again, inside of that, we have an intermediate term downtrend now. So let's mark out those levels that we saw in the monthly again, which one of the key ones was right here, right? This is the big peak before this FTX nuke, right? Where stocks actually kept ripping up through here. And I think if FTX crap didn't go down, this doesn't even happen. I think we just turn this into this, right? But anyways, so this could be a very key level right here. This could be the higher low we're looking for. But until we reclaim 23K up here, I'm not really willing to go out on a limb and say this downtrend's over. Okay. And there will be signs of that on the daily and the 4 hour too. It's not just the weekly we're going to look at for this, but it is extremely important. And again, other key levels would be, I mean, you could take a level in here, right, and catch as many of these wicks as possible, you know, something like this, and say, well, this is clearly a key level because, right, we've retested it many times. When we get through it, we tend to get follow through, so on and so forth. So obviously, and that's around like 19K, but I'm going to leave that out. I'm just going to outline this key high that kind of was the starting point for this big uptrend we had in the last month or so. And then this consolidation range that we were in prior to the breakout down here. And I really think, guys, that if we can't hold around 20K, like 19.5 to 20, I think we just dip all the way back down here. Which could be a great buying opportunity, you know. Like, if we were to follow the, what's it called? The market structure cheat sheet, you know? Like, this would be the top, obviously. This would be complacency. This would be the first major dip. This would be anger. And then followed by something like this. Depression, hope, and then so on and so forth. As this is Bitcoin halving, you know, probably rip after that. That's kind of one of my other theories, right? That we could run all the way back to the lows if we can't hold around 20K. And then followed by a slow chop up into Bitcoin halving next year. I think that's pretty reasonable. A more bullish thesis would be we hold around 20K and hold some of these higher time frame levels. Reclaim 23K in the coming months. And then we can rock towards 30K the months after that. Right? That's more of a bullish thesis. And the most bullish thesis is that we just hold right here where we're at now. But I'll be honest, I'm not so confident in that one. I think tomorrow we have CPI as well. So we'll see what the Fed's got planned ahead for the next few months. But that's always going to cause some, you know, rubber banding and whatnot. So expect volatility tomorrow. But anyways, we're just now going to be sitting through this weekly downturn. So just keep in mind that it took us from March 2021 to January 2023 to get a full monthly cycle down. Okay, so this monthly cycle up will not be over in a week. You know, like, it's likely going to last many months, and it'll have downtrends inside of it. And also, it can fake us out and come back down before the real move begins, right? Like, this was a cycle cross up. At one point, this was popped up, but by the end of the month, it had not. It decided, you know, because this red one or green line or whatever is always changing. So it could be the same here too. Well, this looks like it's going to come up a lot. If we were to get slammed down right now, this would actually begin to roll over. So it's not the end all be all, right? The monthly stuff, but it is a big indication of the overall shift, right? You know, this was market cycle bottom over here, market cycle top, market cycle bottom, market cycle top going into 2025, right? This is the same ebb and flow, right, that we've been following for really Bitcoin's whole life cycle, okay? And I think we're very much still on track for another one of those. Inside of that, though, we'll have many different trends on the weekly, the daily, the 4 hour. We're going to go back and forth until it's giga bull mode, when we're only going to go up for a while, probably. But anyways, let's go look into the daily now, or we can go through on the bands too real quick and just show that, again, we failed in front of this lower high over here, and on the weekly, this is the main lower high before this big low, right? So clearing that and clearing the bands here would be a big sign of strength for crypto as a whole. Excuse me. And in addition to that, we would like to be trending above this weekly 8 EMA. Right now, we still are, so that's positive for our intermediate term trend, even though it's kind of bearish based off these weekly candles. But getting back below that would not be very positive. But if we get below it and then we reclaim it, that would be a good setup with risk back below that weekly low. But again, we'll talk about that as we zoom in. Let's go ahead to the daily and check out this perfect failure at Pi. And we talked about it on our stream in here. Well, I think we were talking about Ethereum, but we're talking about how you have to be careful if we get back up here to 24.5 and close below. And I think I was talking about Ethereum going above 1700 and closing below, but it was the same idea on Bitcoin. And that's exactly what happened. Actually had some really sick trades in here. Basically shorted the peak on this day, closed it around the low. I saw the short on this day, but I didn't really have the margin for it at the time. And I was just convincing myself that the risk was not really worth the reward, but it absolutely was. I mean, could have shorted the peak using key VWAP levels. And I'll go show you guys what that looks like here in a little bit because it's pretty crazy. But I've got a chart with all those VWAP levels outlined, and we're going to look at that in a little bit. But for now, let's finish the regular Blockcircle top down. So, as far as intermediate term trend, let's get rid of these weekly levels real quick. Obviously, these are big levels, and we might refer to them later. But for now, let's focus on this power trend that we had since the start of the year. Okay, we had little trend here, right? Higher lows, boom. This little trend got crushed. And then we went into a little downtrend, right? A couple of lower lows, boom, higher low. And then the breakout was in here, right? So let's look at that trend, right? Here's our trend of higher highs, which has now been shut down. And here's our trend of higher lows, which has also now been shut down. Okay, so this trend is over, right? No reason to refer to it anymore. And the reclaim for this is this general region around 22.8 to 23.4K. So we'll go with 23K, right? That's going to be our big reclaim idea for the bulls. And until then, we are dealing with this intermediate term downtrend, right? So if you're trading the short and intermediate term, this is the trend you're trading, right? I think it's okay to nibble on some spot bags if you like, because we are coming into daily EMA demand. And like I said, there's a lot of bullish VWAPs in here. And also this old high and this entire region here that we consolidated in before this push up to 25K, we could see that hold as well. So it's kind of a wide range, but I'd say if we get a 4-hour downtrend like this into here, right? Final flush, reclaim, higher lows, and then we start to escape from this downtrend, right, with some higher lows, then I think we're looking pretty good. Again, 23K is still that big level, because even if we get a new 4-hour trend here, this could be our new trend, right? Even if we get these nice little 4-hour bounces, this could still be the new trend. Great example of that would be in 2020, we had a pretty significant, this is before the COVID dump, pretty significant trend break right here. Okay. And we started this new trend, this new downtrend that again eventually took us to that massive nuke. And I'm not saying this is coming, guys, by any means. But I'm saying inside of this, we had a really nice 4-hour uptrend here. Right, where if we were to follow all these little lower highs with the daily candles on the 4-hour, this is actually a pretty significant breakout right here. We had higher low, higher high, higher low, higher high. But when that failed, it was toast, right? And this new trend that had emerged continued. So that's now what we have to be kind of cautious about. Because like I said, there is still a bearish thesis that takes us back to this range down here. Okay? So we don't want to just assume that if we get a breakout here that we're definitely going to the moon. But I think there's definitely a chance that, if we get a little uptrend here and we can clear 23K, things start to look very nice for continuation up towards 30. Until then, I would say that, we just got to be cautious that if we retest the underside of this support here, that it's probably going to get rejected, at least on the first go of it. And if we get a power candle like this through it, it's invalidated and we can continue with the old bull thesis. But for now, definitely got to be a little cautious. Okay, I think to be bidding this general region here, but just understand that this intermediate term downtrend is what we have to focus on now. As we got the monthly bullish, the weekly's looking bearish, the daily's looking a little bit bearish, and the 4 hours bearish, right? So we got to, we got to play our cards right here. Excuse me. So, anyways, trades to be had. I think if we come up to this kind of range high we've got going on here, and we fail badly at the 8 EMA, that's likely a pretty decent short. Targeting somewhere in this general range here, right? Something like this or this. You can get a 4 to 5 risk reward ratio there. Pretty good depending on the setup. Flip side would be, and this goes for altcoins too, is that you're accumulating in here, right? And you cut if we start to crack, and then you add if we start to break above here, right? And again, that's basically just playing this little 4-hour trend here and betting on a new uptrend. And then the other plan is to just wait, right, and see how this 4-hour trend resolves. And then once we've escaped that, then you can trade that direction as you wish. Sorry if I keep yawning. Haven't been up that long. But anyways, major bull thesis, we have to get above 23K-ish to be full bull again. And at that point, we have a lot of room for expansion back really towards 30K. Okay, that's the big expansion play if we can get above 23. So in that light, even something like this, stop if we cut 90, if we break 19.5, this is a pretty good trade, right? So if you played well here, you sold well, this is not a bad level to start nibbling some back into your daily demand zone. And obviously, if we get crushed towards 16K, this is a flop. But if you're nervous about that and you don't feel like you need that exposure, then you just wait until the 4-hour trend is resolved. If you're willing to risk a little bit, maybe a third of your risk or half of your risk or whatever, I think this is a fine setup to be taking. And if you get a bounce and you want to hedge it with a little short into 22.8 or something like that, I get that too. Excuse me. I think those would be fine plays to make. Like I said, with a hedge, something like this, I think inside of that is absolutely okay too. All right, so now let's go look at, we've talked about the key levels and the game plan for if the Blockcircle model comes through, right? And for both of these ways of analysis, 23K is the breaker, right? We got to get above there, and we got to hold like 19.5 to 20. This is the region you really want to see hold. Okay, I'm sure if we threw up a fib too, that would be a key level. Yeah, right around the 50% with wiggle room down to the 61.8. But at that point, you start to be kind of cautious about whether we're just going to make that full retrace anyways. All right. So let's go look at some VWAP levels. Also on here, I've pointed out where 4-hour pie line is. Also could be a key pivotal level right around 20K, which is the all-time high. So I'm going to get rid of that because I'm a little bit autistic, and that's kind of distracting having that separate from everything else. But so let's talk about what we got here. So the most important thing for me are going to be previous determined levels, right? So previous quarter value area high example would be for the last quarter of 2022. So this is set in stone. This will not change. This is that level to the end of time versus the current yearly VWAP, and I should have put in front of this developing yearly VWAP, is still changing. Right? So by the end of this year, it will likely not be here. The yearly VWAP could be anywhere. Because the VWAP is doing something like this right now, right? But the previous monthly VWAP will never change again. Previously quartered value area high will never change again. Previously quarter VWAP never change again. This stuff is set in stone and has had a full quarter or a full month for it to be determined, right? I think last year's VWAP is somewhere up here. I didn't mark it out because it's so far away, but we can, that'll definitely be a potential resistance on the way up. So the levels we're going to give the most significance to are previous determined levels. But at the same time, the current levels are important too. Even though we haven't had, a full year to determine the yearly VWAP, we could still mark them out and treat them as if they're relatively important too. But the big levels I'm looking at are the previous month VWAP, right? So January's VWAP, which is right around 20.5K, and the previous quarter value area high. And again, the value area high is one standard deviation away from the VWAP and vice versa. So you think of this as basically its own range, right? And we broke out from that range over here and we got a push much, much higher. Thus, that if we enter back into this range, I start to question the strength of this, the real strength of this trend. And I think it leads us to a pushback to at least the VWAP, if not even the value area low, which again is one standard deviation below the VWAP. Now, I know this might be a lot to follow. Some of you guys won't have a problem. You'll be like, yeah, that makes sense. I get that. Or some of you guys just be like, yeah, not really how I'm going to go at things. I'm not going to really pay attention to it. But this stuff, it really works quite often. Same way with Pi. This stuff holds up a lot. And there's, again, there's quarterly ones, monthly ones, weekly ones, daily ones. You can go 4 hour. But I mostly focus on weekly and above. And if you want to use the daily ranges for scalping or stuff, I think that's fine too. But for our higher time frame analysis, we really care about the previous quarter level, the previous year level, and the previous month level. But again, since the previous year is so far up here, I'm not going to give it that much talk right now. But I would say best case for the bulls is that we hold at the previous month's VWAP as well as the current yearly VWAP, or we hold at the previous quarter's value area high. Anything below that, which is like 19.5, and this, we get confluence with our Blockcircle indicators too, right? There's the 200 right here. Remember, 4 hour Pi was in here somewhere. Let's see if there's any, it's kind of below our weekly setup stuff on the Blockcircle stuff. Oopsies. So, anyways, tons of confluence here. Let's see if I can get rid of some of these drawings, though. It's kind of driving me insane. There we go. So mark these levels out on your chart, guys. These are absolutely going to be significant. If we come back down, oopsies, to say 19.6, and let's say we test it, right? We're hanging around it, and then we flush below it, and then you get a bunch of people puking into the lows, shorting super hard, but then the buyers step in. That is an actionable long. Even just back towards these key levels in here. This is a nice 3 to 4 hour trade right there. And again, you're not going to be buying something like this and saying, all right, I just bought this little reclaim here. We're going to target 30,000. Like, obviously, that trade can work out. And you can, if you get fortunate, you can trail out a setup all the way there. But in reality, we're really just trying to play with this VWAP stuff level to level, right? When you reclaim value area low, level to level to the VWAP. When you're trending about the VWAP, level to level to the value area high, which is again just a standard deviation plus 1 of the VWAP. And then you get above the value area high, you start looking at levels, extension levels above it. So for example, would be, the previous month's VWAP, or I don't know. I mean, there could be all kinds of different levels. It just all depends on where the levels are. And yeah, so we're definitely going to be paying a lot of attention to that, and a lot of my trades will be based around these levels. Right, and so you can see here we got Pi right in here around 20.2K. So let's say that meets us at previous month's VWAP. And we have a little downtrend going there. Boom, boom, boom. Consolidation, consolidation, consolidation. And final flush. Reclaim that VWAP with actual volume to confirm a bottom. Right, or maybe we'll even run these lows first. Right, because there's a lot of people that will have their stops below there. And then reclaim. That's an actionable long. Right, here's your risk. And then your reward is back to value area high on the yearly. And that's really only if you hold like 20.5, 21, then we can make that full extension up there potentially. Pretty good risk reward on a trade like that. Okay, and again, that's right around 20.5 to 20.8K. Okay, so I would really like to see Pi come up in the next few days and meet that. And my guess is that that will happen. So we'll plan accordingly. And I want to go through how well this can actually work out. And I will use some of the trades I took on the weekly VWAP. So Let's see, was it in here? Yep, it was in here. I'm just going to go ahead and outline it so I can get rid of it. At this time, right, this was the previous week's VWAP. Okay, and when it's really flat, that's a great way to tell if it's the previous week or not, because the current one is constantly adjusting. Right here, this is, you can see the current one kind of flowing up like this, kind of flowing up here, and that will become flat once that week is up. Okay, which was, I guess right here or whatever. But the flat one up here was the previous week, and it's a lot easier to see when you aren't already really like it's kind of hard to see these now that we're so far ahead of them, but when it's right here, it was pretty, you could see pretty well. This is that previous week's range, right? And the VWAP, previous week's VWAP was right in the center of it, okay? Again, previous week VWAP, previous week's value area high, standard deviation 1 away, and then standard deviation 1 below. It's kind of hard to see here, but is the value area low for the previous week. So the trade that I took, okay, and actually, I took the trade right here. This was was it here or was it? Yeah. Right in here, I took a trade off this VWAP reclaim, and you can't really even see it, but here was our developing week VWAP, right? And this was a FOMC or something. We nuked below it. I wasn't quite trading it yet. I didn't really have anything actionable. I think that Kilmex I'm learning from, I think he took this trade, the swing on the top of this value area high right here, down to the VWAP. And then I took the flip of that is the reclaim of this VWAP. I think I was long at, I think I was long at like 8.15. I don't know why. Maybe WooTrade went lower than Binance or something. But anyways, long this reclaim, and then took profits right up into this previous week VWAP and went short at pretty much the exact peak here at 23,340. Covered the rest into the lows here. Didn't get the exact low, but pretty great. And then this is what I was talking about. Over here, I saw this setup, and this is what I'm talking about, right? You run the level, all these buyers are flooding in, shorts are stopping out, liquidations are hitting, and then right after they all get trapped, and the big sellers come in and shut that shit right down. That's a big short opportunity there. And I remember seeing it and thinking, this is a great short opportunity. But I had like $2,000 collateral left. I was like, what am I going to make? $1,000 something. I got all like cocky. And I was like, I don't need this. The longs are going to work out. Getting in my head and all that crap. But this was another very actionable, if anything, even more actionable than this. Because this was a little bit trickier. You kind of had to go into like the 3-minute, 5-minute and see. We tested it. And then we ripped above it. People, the same thing I'm talking about here happened on a lower time frame. People got trapped buying in here, and the real sellers came in and started to slam it. Same thing happened here. And that's exactly what we're looking for. This is what we want to see on the flip side when we're coming down to our key levels over here. Okay, we want to see this exact same test, stop run, and then immediately come back in the other direction. Right, so if 20.8 is our key level, we want to see a test of that. Chop around to people entering longs, getting ready for a big breakout, and then run those people's stops. An immediate reclaim, that is your long opportunity right there. Stop below the low, and then you're targeting any levels above that you have marked out. So hopefully that makes sense to you guys. It's actually called a mousetrap setup. Is what he termed it. I don't know if that's a proprietary term or anything, but that's what Kilmex calls it. And essentially, it's when you come down to these lows, and the only way to really see this is to look at like order profile and market profile and all that stuff. And I'm going to go into that one day, but for now, I'm still kind of a noob with it, so I'm not gonna. But essentially, when you crack these lows with market profile, you can see as we go down, a bunch of sellers are just starting to flood the market, right? They're shorting the new lows, and there's not people that, or that's not what I want to say. People are getting trapped here extremely hard, thus that you form this sort of a B in the market profile. And then the same thing when you come up on the seller side, right? You have people selling, they're selling, a million, 2 million, 3 million. Then all of a sudden, you get through this level, like right up here, and you have a $5 million buy, you have a $10 million buy, then you have a $10 million liquidation, $20 million liquidation, obviously exaggerating. And then it pauses for a moment, a brief moment, it pauses. No one's buying. And then a big seller comes in, and then another big seller comes in, and all of a sudden these $50 million in buys are trapped, and you just know they're going to get pushed the other way. And it's the same thing we're going to be looking for here, right? Some small selling going into the level, small selling, then we break that level, start to hit, liquidations hit, big volumes getting liquidated, sellers are shorting the new lows, and then it all starts to pause as it goes lower. It starts to pause. No one really wants to sell that low anymore. These people get trapped, and then a big buyer decides to come in. You form this B shape, you reclaim this level, and that's your go signal. Again, I know I'm talking about a lot here. It can maybe be very confusing. For some of you, maybe it's very clear what I'm talking about. But that has been my highest hit rate scalping setup in a minute. And again, I'm not going to go into it in any more detail here because I'm not confident enough in my own use of it, my own execution to teach it yet. But that's the basic idea behind it. And that's what gave me this really nice short at the Pico top here, and again, would have given me this one if I had the balls to actually trade it. And then anyways, the target for that would be, again, it's kind of hard to see here, but value area high. This was the value area low, right? The previous weeks. So you'd be taking VWAP to value area low, and that's where you're covering the majority of your trade. Obviously, it goes lower, then you come back. Again, I wish I could, let me get rid of the developing week for a moment. Where is it? I don't know if this indicator I can get rid of the developing. Oh, is it this one? Is this just for labels? It's just labels. Ah, here we go. I can just do this real quick. I want previous. I don't use those. Well, that did jack shit. I was hoping that would actually help. Anyways, I'm still trying to figure out these indicators a bit. But let me outline the whole previous week range that this is. Value area high, down to VWAP, and it's hard. I'm literally pointing at the screen thinking you guys can see my damn finger. But right here, we can see this flat line. That's the value area low. That's exactly 1 standard deviation below this VWAP. So let's outline that. Right? Again, it's all level to level. When you're shorting here, you're not trying to target 20K. You're targeting that value area low. That's where you should be covering. I mean, you can start to cover as soon as it goes in your favor if you want to. But that's where you're covering the majority. And then when we retest that low end, again, when you break out of these value areas, you tend to expand in the direction that you broke out from. So this was also a valid short right here and right here as we retested it from the underside. And then once again, even with the developing area one, you can tell we retested the underside of this here. That could also be a very valid short, right? And then at that point, you're targeting, once you start to escape your weekly levels here, you start to target your monthly levels, your quarterly levels, and stuff like that. All right, and so once again, here is our current value areas, right? This is our previous week's, I am on the weekly, right? Yeah, previous week's VWAP is at 22.4K, and the value area high, what do you know, is at 23K. That is the key breakout level. If we can start to break above this weekly range here, then I think we're back on for the bulls, right? Because that's where the majority of the bearish price action has come from, is below 23K, right? Obviously. So for now, if we test the underside of this, I expect it to act as resistance. There could be definitely some good scalps to be had upon failures at 21.8K. And then reclaims of that, right? And acceptance into this range. And I think we go back towards this previous week's VWAP up here at 22.4K. And again, if you can find confluence in this with the Blockcircle trading model too, for example, on the 1 hour, we've got the 200 coming down and pi coming down. Maybe that'll end up being a confluence trade when we get back to the previous week's VWAP. Say the pi comes down here, previous week VWAP is in here. You come up, you test it, boom, boom, boom. Big amount of buyers come in, sellers hit it hard. That's a nice short opportunity because you have a ton of confluence between your models, and then you're targeting the value area low of that week. Okay, so hopefully that's making sense. I know I'm talking a lot, and a lot of this stuff you guys have probably never heard before, and it can be very confusing. Just wait till we start looking at market profile charts, guys. This is confusing. It goes about 1,000 times deeper, but this gives us a lot of information that we can get from there too. And I'm using some proprietary Killmex indicators that I had to pay for. So, but there's indicators, guys, that do this stuff. It's just outlining, current VWAP and one standard deviation on either side, and that for the previous week. And there's indicators for free that can do this. But I wanted to learn. This guy's an expert at. I wanted to learn directly from him. And not just try and, go at it my own. Like, I want to figure out how the experts are doing this stuff. Because if I'm going to incorporate this into my daily trades, I want to make sure I'm learning from someone that has done this for years. And this guy's done it very successfully for years. So, Killmex is legit. Definitely worth checking him out. Anyways, yeah. And look, you can see here, there's a great trade right here from the previous week's value area low. Right? And it's exactly what I'm talking about. Let's just zoom in real quick and we can see it. Right? Very key level here. We're trading into it. People are building their shorts, and then we can confirm it with this amount of volume here, this volume increase, but it's even easier to confirm it with market profile. But again, not going to get into that yet. People are shorting, boom, short stops taken out, breakout buyers are buying in, people that didn't buy this whole range are buying in now, and then it stalls. For a brief moment, it stalls, and a seller comes in, and a bigger seller comes in. And those are the signals we can see on market profile. You'll see a big sale coming in after not, coming in for a while. That's your trigger. Stop above the high. And then if you get acceptance back above the average price of that little breakout, then you can cut it as well. And then, where you're targeting a short from there just depends. Maybe you can throw up some monthly or quarterly levels and see if there is anything that lines up nicely, or you can just trade the developing week, short there, cover back down here, something like that. And then you just trail out your stops with these lower highs, and you'd probably get cut right out here or something. But that's a nice trade. And the same thing if we come back up here, this could be a nice trade. Maybe we run this level first. And then if you don't get this big pause and reversal, if instead you get higher lows, you're going to want to start to think about taking it the other way. Okay? Because any acceptance in this value area can possibly lead to expansion back towards the middle of that range, which is that VWAP. Okay, so hopefully this stuff is making sense. I know it's a lot of new information, but I really think this can give us even just the slightest bit better edge in nailing this market. So I think we should give it the time of day. But anyways, key levels on the upside, guys. I wish I could get rid of some of this other stuff and just see one previous period, but the previous week's value area high is at 23K. That's a big break or break level, right? The current yearly VWAP, or no, this is developing month VWAP is at 22.8K. The previous month's value area high, again, the same way we're talking about this range on the weekly, we have the same range on the monthly, right? Here's our value area low from the previous month, January, which is that big bull month. Here's our VWAP, and here's our value area high, right? Right now, we're trading in this range. We're trending below the value area high. We should expect this to trend towards previous month's VWAP, okay? And if we hold there, maybe we can talk about expanding back towards the value area high. Only on breaking above this Do we flip back bullish and start to look at the higher time frame levels, which would be right what am I looking at? Previous, oh my gosh, I'm getting mixed up in all the terminology. Previous year value area high, which again is the average price from last year, which solidified itself at the end of 2022 right here, and one standard deviation above that. This is our previous year's range, right? And all the price action we're seeing right now is inside of that. So if we can escape, we're basically, this previous month range is basically the midpoint of this. If we can escape above that, I expect expansion to the top of that range. Okay, likewise, we start to lose 18, I think we could see new lows. Okay, so there's a lot of things to take into account here. Okay, but I'm expecting us to hold somewhere around 20.5, 19.5, 21K, something like that. Okay, let's take off the yearly levels. Let's take off, again, this is our monthly. I should just use different colors for outlining this. Let's do this. Okay, let's do this. Yearly range will be over here. Okay, and we can see it pretty clearly. And I mean yearly, I mean previous year. We're talking completely previous periods here, not developing ones, because those can change by the time that it closes. Let's go look at the quarterly one. Oh man, it's kind of hard to see. It'll be easier to see over here. Right? Okay, here's our previous quarter one. Again, if I didn't have all these alerts, you'd be able to see, but this is where the last quarter of 2022 ended, and you can see this developing quarterly VWAP turns to a different kind of color, a slightly darker color, meaning it's never going to change again. So this is our new range, or this is our confirmed range for that quarter. So let's outline that here. Okay, big quarterly levels. And let's look at the previous month's levels. Right here. And then inside of that, you could throw up your weekly levels too. But that's really for scalping and short-term trades. This is going to be for our intermediate-term trades. So this is our long-term range. Any kind of new uptrend above 23K, I think gets acceptance towards 30K. All right? And any kind of acceptance below 19.8, 20K, I think we could see back towards this level here, right? If we get back into this range, which we did, we're looking at the middle of that range, which is the VWAP. And if we get below that, we're looking at the low of that range. Likewise, the same idea here. Again, if we start to break below here, below this range high of, I think this was the quarterly, we should expect the VWAP of that to be tested, which lines up with our value area low from the monthly range. And then flip side is our previous yearly VWAP, which is right in here, I think. Let me make sure I'm getting that right. Yep, right here. Trending below that, we should expect a pushback towards the bottom, right? And that's the most bearish outcome here. If we can't reclaim 23K, we could just be going all the way back down to 15. Right now, it's not the end all be all. Of course, we have the quarterly levels, the monthly levels, plenty of things to stop us from going that far down. But we have to start holding at some point. We have to hold the monthly VWAP or the quarterly value area high. Some of these things have to start holding up, or else eventually these lower lows just take us down to the yearly low of last year. Right? Okay, so for now, we are mainly trading inside of this one. Okay, the previous month's value range. Okay, so I would expect us to hold around 20.6K if we make new lows here. That also lines up with the low end of this consolidation range in here, right? A lot of support in here, a lot of potential demand. It also lines up with pi on the 4 hour rising up, and it also lines up with the 200 on the daily. So 20.5K, 20.6K has a ton of confluence. If we come down here and we start messing around at these levels, and then we flush and reclaim, that is absolutely, from my point of view, an actionable long stop below the low, and we'd be targeting back up towards 23K. Okay, the top of this monthly range. Likewise, if we fail to stay back above it and we start to retest below it, I would expect that to push down towards the value area low, or at least the value area high of the quarter. And again, right, if we're messing around here and we can't hold there, we don't get the reclaim we want, and we keep going lower, expect to push towards that quarterly VWAP 2 and this value area low down here. All right, hopefully this is not too much terminology being thrown at you. I know maybe it's confusing, or maybe you're all gigabrains and you're like, really, you were confused by this? It's like 5 levels, like, come on. But this stuff, in my opinion, is extremely, extremely valuable to a trading system, and is worth the time, if you have it, to learn where to map these levels, especially when it comes to scalping. Again, absolutely. I mean, I have not nailed a scalp as perfectly as I did here in a long time. I don't care about nailing the Pico top or the Pico bottom. But when you can, your opportunity for extremely high risk reward increases, because you can get a really tight stop, really up the size without upping the risk massively. That's exactly what we want to see. And I'm not saying you're going to get it every time or it's always going to be that perfect, but it's definitely worth giving the time. And then you can apply this to other assets too. I'm mainly going to focus on Bitcoin right now, as I'm still learning this method of trading. I don't really want to overcomplicate it. I want to get it to where I can pull up the charts and see exactly what I'm looking for within 5 seconds. The same way I can pull up my bands and stuff, and I know exactly what's actionable and what's not in the first 5 to 10 seconds I look at it, no matter what the chart. And that is just not the case yet for me with market profile and VWAPs and all that stuff. But coming up on almost an hour here. I always want to make someday I'm going to be able to get all this information out in like 20 minutes, but it's just a lot to talk about, you guys. So I hope you understand and I appreciate it. But yeah, so these are the trades I'm looking at right now. 20.6K, watching for lower time frame reversion around there, and 19.8, 19.9, right around 20K. Looking for reversion around there as well. Below these levels, things start to get really kind of gross, right? Towards 18K, potentially even 16.5. All right, so definitely be cautious if we're not able to hold somewhere in this general region right here. Right, things start to look pretty gross. Because then this previous month's range starts to be what we're looking at. Okay, and really this is the previous month, right? This is December. But if we can't hold in here, I mean, yeah, like I said, we're looking at like $18,000 Bitcoin. All right. So, pretty much all I have to say about Bitcoin. Again, near-term trend. If you're looking for scalps, let's throw, we'll go ahead and make a mark here. And a mark at, whoops, the quarterly value area high from the end of 2022. Let's close that. Let's throw up the weekly levels. Again, if you're looking for some shorts, I think a good short play is to short like a stop run above 21.9. You know, if we go back above, get a bunch of buyers, and then some strong sellers come in, I think that's a good short, stop above the high. If you start to reclaim that and make some little higher lows and lower time frames, I think you just play on the long side, targeting back towards 22.4K. And the same thing goes if you get acceptance above there, you can target 23. But 23 is the big level across quarterly levels, yearly levels, monthly levels, weekly levels. That is a big level to break for the bulls to be back in business. Until then, I'm okay just kind of being cautious. But once we get expansion above that, very much like back here, right? When we started to get expansion above these previous weekly highs, we really started to send it. Likewise, this one here. Expansion above that, and we just kept going. Okay, now we're back below them. We're trending below them. We got to be more cautious. It just is what it is, guys. But there's still plenty of good trades to be had. You know, shorts into previous weekly value area low, longs upon acceptance of that, and then longs upon failure to break these levels. And I don't mean failure to break at all. You really want to go below them and then accept them again. Versus if you just hang out above them, I'm still expecting people are accumulating longs in here with their stops right below it. You really want to see that flush and then reclaim after a bunch of people have puked the low. That's what we really want to see. And, you know, we pretty much had already that just the past day, you know, this low here. Someone's come in, and by just a couple of bucks, they've puked. Look at the volume spikes down here. People are puking this low, and what do you get immediately is a reversion back to our developing weekly VWAP. You know, like, it is what it is, right? The levels just work. But anyways, I think that's a pretty good play. You know, value area low down to previous month, previous quarter levels down here. Right? Or down here, whatever. And then upon acceptance of 21.8, 21.9, I think you can look for a long up towards 22.4 if you don't mind that you're a little bit contrarian, i.e. that longs are going to be more profitable when we're trending above these previous ranges versus when we're trending below. Shorts are going to be more profitable. So, yeah, that's pretty much all I got for you guys today. You know, the shit coins I'm looking at, they're just moving with Bitcoin, right? Like, we've had a bad couple of days on Bitcoin, so we've had a bad couple of days on, you know, most of these altcoins, right? Except Reves. Reves is pushing up. I really was hoping that we could get back towards 3. I don't quite have the size I'm looking for yet on this, but regardless, I mean, the Reves chart is basically porn. I mean, look at this. Even if we stay in this range another 4 to 6 months, in my mind, this is going at least a few 100% from here. You know, at least to this cluster of highs, right? The low from open to in here, right? At least to there. And in reality, you know, I think given how low market cap this is, $3 million, you know, what is this? A 200% move takes us up to like 12. I'm looking for 50. I'm looking for 100 on this stuff. I'm looking for this to be a blue chip. So I'm not trying to sell now. I mean, I'll definitely take some profits if we get a big pump. But some of this I want to be keeping for major expansion. All right. And same goes for these other shitcoins. This is definitely the worst of the bunch. 0x0. This is just some AI privacy mixer coin or some shit. I don't know much about it, but they've got a lot of stuff. I'm not trying to shit on them. They got a lot of stuff being developed in the background. And, you know, price action has been pretty decent lately, just coiling for the last couple weeks. I could definitely see it coming back down towards these kind of range lows, but it's 400K market cap, guys. That's tiny. Most people, like, you know, public figures should not really even be talking about projects this small. I'm talking about them because if they're going to go crazy, I want you guys in, but you have to understand the liquidity is nothing. If I sell my bag, it'll go straight down. If you guys buy in $1,000, it'll go straight up. That is how it goes with low liquidity. So you know, if you're buying something like this, if you're following me on it, only do it if you accept the risk. The risk is basically it's going to be extremely hard to get out if it goes down. You're basically holding this to 0 or hero. So if you're willing to risk $500, do not put more than $500 in this. Because it's going to be very hard to cut this if things start to go south. I mean, look, it's gone from $6,700 to $4,600 on like less than $10,000 in volume. Okay? So they're extremely easy to move. If you're getting involved in stuff like this, just know what you're getting into. Now, I don't want this to go on a killer run, and then I haven't talked about it, but I'm invested in it. So I am talking about it, but we have to have some accountability here, guys. It's extremely low liquidity, and the same goes even for Revest. I mean, 1 million is pretty good. It's a lot better than the other low caps, but like MPG, 100K liquidity. The opportunity is huge. You could 10x just a $5 million market cap, which is still very small. But the liquidity here is low. The risk is very, very high. WASDR, 200K liquidity. Amplify, 500K liquidity. This is the stuff that they don't want paid group leaders talking about. They say, oh, it's irresponsible. Well, in my opinion, it's not irresponsible as long as you're being honest about the risk reward, right? Like, if I dump this now, and I will dump any day I please. Same with you guys. If you guys buy and it pumps it, great. If you guys sell and it dumps it, great. That is your prerogative. And I will do that when I want. You guys should do it when you want. That's how it goes. But, I'm not going to go post it in Boss Crypto and say, hey, guys, I'm in. You guys should buy this up. And then when it pumps up from that, I'm not just going to sell it on you. Right? Like, I'm not looking to sell this at 600K market cap. I'm looking to sell it at 6 million, 10 million. Right? Big money. But, again, I'm not going to let that happen without letting you guys know what I'm doing. So, these are some shitcoins I have. WASDR is a gaming project. The guys behind this have a bunch of users. I think this is a future blue chip, honestly, one day. I kind of sat out. I was in back here when we were making higher lows, and then once we nuked down and broke this higher low, I kind of sat out for a while. But now we've reclaimed a 4-hour uptrend, a daily uptrend, a weekly uptrend, and we're consolidating in a bullish manner, so I'm okay holding on to this, unless really we break down below a penny. Amplify, you guys know, I'm locked up until 2027 on this one. A super ballsy, perhaps even retarded risk to take. But at the same time, I can never go flat on crypto. I will now always have exposure to crypto no matter how panicky or dramatic I get. I will have something that's always earning me yield every month. I think I brought in $1,000 or whatever last month on this, or $2,000. Nothing crazy for the size of the position, but over time, this will pay itself off. I've already made, 3 Ethereum, real Ethereum off this, and then like 12 grand in Amplify rewards. Now, obviously, I don't get those rewards till 2027, so those Amplify rewards to me are 0. I calculate them based off the idea that Amplify will go very close to 0 before I even get them. But the Ethereum, I get that every month. I claim that. I've already gotten 3 Ethereum from this since I locked up in September. And this is during a dead bear market, right? So let's say, 160 days is 3 Ethereum. And this cost me 15 Ethereum when I first bought it, right? So that's 5 times this 160, whatever that is, I don't know. And I'm locked until 2027. Again, a long-ass time, right? Basically 10 times that 3 Ethereum. So that's 30 Ethereum. I'll probably, if it stays absolutely dead, no traction at all, 30 Ethereum, 2 times what I invested over the course of this. On top of that, I'm getting almost 200% APY at Amplify. So if somehow Amplify actually goes into an uptrend, exactly what I'm talking about here, 2024, 2025 bull market, and then a bear market, or whatever, then another bull market. If it does this, the Amplify rewards I get from that will also be massive. On top of those regular ETH rewards, I get ETH rewards in platform fees, and I also earn GAMP, which is like an entitlement to Ethereum fees from Ethereum validators. So there's like 4 different streams of income that I will be guaranteed to get as long as the project doesn't rug until 2027. I can never stop earning that. Every month I will be getting something from this protocol until 2027. And to me, that's pretty nice. Right? I quite like that. Obviously, the downside is I can't sell my Amplify position if we go 10x. But likewise, if come the future, this is a long-term existing protocol, and it keeps making higher lows and higher highs over time, it's kind of a good thing. I can't sell the 10x before the 1000x. That's kind of the mentality. But anyways, will it be smart? Will it be stupid? There's no way to tell until I can recoup my investment, and until 2027 rolls around. So Anyways, I'm not saying to lock your guys' coins for 5 years. I don't know if it's. I don't think it's a good play. It's extremely risky and extremely ballsy. But it kind of hyped me up when I did it. Like I'm locked into crypto for 5 years, baby. Like why not? And then I got a bunch of other stuff that's all liquid. A bunch of seed sales and stuff, and then the regular trading portfolio too. So I don't mind having something locked up for the long term. But anyways, that's right about an hour now. So I guess I'll tap out on this one. Again, I appreciate you guys' patience so much last week. It was a tough time, so I really appreciate that. But now we're bouncing back. Everything's good. I'm excited to be back and putting out content for you guys. Like I said, I'm going to be revamping this crypto trading course that I recorded in 2019. So, 4 years later, I've definitely become a much better investor and trader, and I've just learned a lot more and how better to communicate it to my audience. So I'm really excited to redo that whole course for you guys, so everyone can have a baseline strategy to go by if they choose to do that. And I'm not saying not to use your own strategy or whatever, but if you're the kind of person that needs a strict set of rules to follow, I'm going to have that for you, and I'm going to show you how you can be profitable long term using these strategies, right? And maybe we'll even try and incorporate a section on some of this new stuff in there if I find the time. On top of that, Basil has spent the better part of the last 8 months building out a full data analytics, on-chain analytics platform, NFT analytics, and it is going to be absolutely batshit. It's going to be unlike anything else that's out on the market right now. You're thinking like Glassnode, High Block, stuff like that. It's going to put it to shame. Still tentative launch. I've yet to beta test it myself. Once I beta test it, we get some other beta testers. Then we can talk about a full launch. Hopefully sometime Q2 of this year, but I don't want to say anything and it not come. But it's coming, and it's going to be badass. So I hope you guys are excited for that. And obviously that I'm almost certain will be included in every Blockcircle membership. So if you're in the chat, you're going to be getting access to that. And then we might even be doing some partnerships with other data analytics platforms. I mean, it's going to be some really cool stuff we got going on here, guys. You're going to want to be a part of it. And we'll be happy to have you. So if you guys have any questions, comments, concerns, or anything, or you just want someone to talk to, I'm in the chat basically 24/7. Obviously, I got to sleep too, but I'm around all the time. Do not be afraid to reach out. I'll try to get back to you as soon as possible. And yeah, CPI's tomorrow, guys. So expect some volatility. Maybe we can get a good trade off this 21.9K value area low. Or maybe we can get a good long down here at 20.6K. We'll see what comes. I'll keep you guys posted as always. But I hope you have a wonderful start to your trading week. And be safe. Don't do anything rash. If you live in Ohio, get the fuck out. Things are going south there really fast. But anyways, I also want to say, and I'm going to start doing this because it's quite important to me. I want to thank Jesus and God for all the many blessings in his life, for allowing me to be here, and for you guys allowing me to be here and to teach others what I'm doing. It really means a lot to me. So I just want to thank you, Jesus, for that. I mean, what a wonderful opportunity and what a wonderful group of people to be able to teach for. So I appreciate you, Jesus. And I appreciate every one of you guys in the chat. And I will catch you all in the next video. Be safe. Peace out.